Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is March 23rd, 2026. Disclaimer before we dive in, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of US GoldMining, an exploration and development company focused on advancing the 100% owned Whistler Gold Copper project in Alaska. It's Tim Smith. Great to have you back on the show.
Hi, Jesse. Thanks so much for having me.
Well, I want to kick the conversation off by discussing a very timely topic, of course, the war in Iran and the way that gold has reacted so far, because a lot of people expected the metal to rise in the face of such massive geopolitical instability, growing conflict in the Middle East, and yet gold, along with silver, has been falling since the war began. Why do you think that is, and how do you expect gold to react if the conflict continues to drag on?
Yeah, well, that's right, Jesse. I mean, normally, yes, gold rises on geopolitical tension. Gold, of course, is a safe haven asset. Yet gold is down around 14% over the last month. And, it's almost back where it started the year, which was around 4,500. Most of that decline was really just over the course of the past week, probably week three heading into the Iran conflict. And of course, that conflict is dragging on. And I think really the timing, the trigger for the timing and the decline in the gold price was when the Fed announced that it was pausing on interest rate cuts early in middle of March. So, while the root cause is in response to escalating Middle East tensions, the negative flip this time around, I think, it's all about the energy crisis that the war is also bringing about. This Iran conflict, and including the shutting down of the Hormuz Strait, the missile strikes on the natural gas production that we saw just last week. These things have sent energy prices soaring. It's dashed hopes for near-term interest rate cuts. And gold prices, of course, further pressured by rising treasury yields now and a stronger dollar. And so I think what we're seeing is essentially profit taking on bullion as investors are liquidating positions to offset losses elsewhere. But I think, longer term, stepping back, gold is still up well over 100% over the past 2 years. And I think the long-term macro drivers, especially the global diversification away from the US dollar, I think those things remain firmly intact and will do so in the longer term.
Yeah, great assessment. Now, central bank gold buying also a big part of the story over the last couple of years. Now, according to the data from January this year, net purchases worldwide came in at 5 tons. This is around an 80% drop from the monthly average of 27 tons throughout 2025. Do you expect gold buying to reaccelerate throughout the rest of the year? And could you speculate for us on why you think there's been less purchases so far in January?
Yeah, sure. I mean, I absolutely expect central banks to continue accumulating bullion, especially over the longer term. I think the slowdown in January is more of a response to a rapid price shock rather than a shift in policy or behavior. Gold started, remember the start of the year, gold started at about $4,300 and it ended the month of January at $5,400. And when you see an $1,100, dollar change, a delta across the span of a single month, just, mind-blowing increase in gold in January, it's completely natural for buyers to step back temporarily while prices stabilize. So, I think by the end of January, we did see gold stabilize somewhat around 5,000 plus or minus a couple of $100 on shorter term trading. And of course, with the exception of recent events tied to Iran. But I don't expect January's pause to reflect the longer term trend.
Now, you spoke about it earlier, the Fed deciding to hold rates steady at the last FOMC meeting last week. I want to read a quote from Fed Chair Jerome Powell. He said, "In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy." Now, meanwhile, Australia's central bank is the first to be raising rates, citing inflationary concerns. Are these policy decisions acting as headwinds on the gold price in your view? You alluded to it a little bit earlier. Perhaps you could unpack it for us.
Yeah, sure. There's definitely a connection. When the Fed signaled an extended hold in mid-March due to persistent inflation and ongoing geopolitical uncertainty in the least, gold took an immediate hit. Obviously, we're seeing that recently, and the markets are now pricing in um, a 2026 rate cut, maybe just one. I think they're predicting about a 50% chance of even a hike in 2026. And so that ambiguity around where those interest rates are going to be sitting is absolutely a short-term headwind for gold. But I think, historically, gold remains the ultimate long-term store of value. And the central banks know that. So, I believe the longer term theme of the central banks accumulating bullion will continue, and the precious metal will remain the universal long term store of value that it has always been.
Now, mined gold production hit a record in 2025, according to the World Gold Council. Do you expect another big year of production here in 2026? And assuming we continue to see these high energy prices, what sort of impact could that have on the gold mining sector?
Yeah, I think we'll see it steady. I mean, 2025 was technically a record, but it was only about 1%, year over year increase. Uh, I do expect continued production growth over time as the sector broadly gears up to increase production. Although, mining's not really like other sectors where you can just flip a switch. It's a long lead game. You just you can't just turn on more production. You need to undertake pits, pushbacks, or underground development. Major capital expansions to upgrade your process flow sheet. These things can take years to permit and to build. We're also seeing grade profiles continuing to decline globally. Tier one discoveries are becoming rarer. And furthermore, I think the industry is hyper focused on capital discipline, which it needs to be. And even majors like Newmont are taking production dips in the short term to make fiscally disciplined mine sequencing decisions. So with these high fuel prices squeezing margins and organic growth becoming difficult, I think the delta between costs and realized gold sales is still healthy, but bringing new supply online is not any easier.
Well, let's talk about how US gold mining fits into the picture. It's been a while since I last had you on the show. So, for those new to the US gold mining story, could you provide an overview of the company?
Yeah, absolutely. So we're a NASDAQ listed company, ticker is USGO. We went public in 2023 and we had a very singular focus, and that's the advancement of the 100% owned Whistler gold copper project located here in Alaska. It's a large gold copper porphyry system containing 5.4 million gold equivalent ounces indicated and another 5 million gold equivalent ounces inferred. And about three-quarters of the total value in the deposits is locked up in gold, with the rest largely in copper. And it's all about location. We're here in a top-tier North American jurisdiction, Alaska.
Now, you released the results of your preliminary economic assessment at the Whistler Gold Copper Project at the start of this month. Can you dive into the details for us and how they will inform your plans moving forward?
Yeah, absolutely. The PEA was a major milestone for us. Headline numbers speak for themselves. An after-tax NPV of $2 billion and a 33% IRR, and that's at consensus pricing of $3,200 gold and $4.50 copper. We're outlining an initial 15-year mine life, producing around just under 250,000 gold equivalent ounces per annum. But the real standout is the early mine plan and the quick payback, because by targeting a higher grade starter pit in the first 3 years, we can push that peak production to almost 350,000 ounces per annum early on. And that drives that payback period down to just 2.1 years.
Is the ultimate goal here to go into production yourselves or continue to de-risk the project, delineate resources further, and get acquired? And in either scenario, what does the roadmap to get there look like?
Yeah, sure. As I mentioned, our mandate is simple. We We just need to de-risk the asset and increase the net asset value per share. The work we need to do right now, whether it's build it ourselves or ultimately making it attractive to be acquired, is it's the same work. It's engineering, it's baseline studies, permitting, and undertaking more exploration to bring more resources on in the shorter term to fill out that production profile and add to the longer term mine life. Certainly the major producers, with the struggles that they're having with organic growth, we know that they're actively looking to secure their long-term production profiles. So a partnership or a buyout is always a possibility, and we're open to that, of course. But our focus is entirely on advancing the project right now and just delivering the absolute best return on investment for shareholders.
And could you talk a little bit about the situation when it comes to Alaska as a mining jurisdiction, a relationship with government, local communities? How favorable of a jurisdiction is it for a project like yours?
Yeah, I find it an extremely good place to work, Jesse. We're located on state land. That's a little bit unique compared to some of the other projects where you might have a patchwork of different land ownership. Maybe there's, federal, which could include forestry or BLM land. There might be some native land and in addition to state land. So, that's not us. We're differentiated from that. We're just dealing with the state, a single regulator. It makes permitting simple. We got our exploration permit inside of 90 days. And furthermore, Alaska is a resource state, and they know that they need to build that infrastructure to support resource extraction over the longer term and ultimately grow the economy. So the state, a few years back, pulled its checkbook out and wrote an $8.5 million check to design a road that leads directly from Anchorage all the way to what will become in future the mine gate at Whistler. That's the West Susitna Access Road. This is a state-led Roads to Resources initiative. We're very excited to be able to partner with the state and the various state agencies that are leading that project. In fact, I'm in Alaska this week planning to meet some of those agencies to get an update on progress with respect to their design and permitting.
Great. We'll have to keep up to date with that. Now let's talk about the company's current cash position. How much cash do you have? How much runway does that give you? And what are the plans to raise more capital as needed?
Sure. So we ended the year with just over $7 million in cash, and that funds our upcoming 2026 exploration program. We also have some warrants that are expiring at the end of April 2026, and that could bring in additional working capital if the share price moves above the $13 strike price. And then, looking ahead, we will be incredibly disciplined. Any future financing we do will have a strict, clear use of proceeds tied directly to studies, engineering studies, baseline surveys, maybe accelerated exploration, etc. And ultimately, we're working strategically now to define how we want to move Whistler towards pre-feasibility as expeditiously as possible.
And what are the main catalysts and news flow that investors can expect coming out of the company? Is the 2026 exploration program, is that the main thing people should be watching? And is there anything else that should be on people's radars?
Yeah, I think there's a lot to watch, and certainly the exploration coming up this summer is one of the main thrusts of the work programs that we'll be undertaking this year. I think one of the key takeaways that we want people to remember is that our PEA is just a base case. Whistler isn't just a single deposit. There are two other deposits that can be brought into future iterations of that mine design. And then, the Whistler orbit and some of the other exploration targets at Island Mountain and Muddy Creek that we have, these are emerging as classic porphyry clusters. And they have potential for district scale exploration expansion in terms of discovery, new discoveries, bringing new future resources and reserves online. We're all about building out a pipeline of targets that we can continue to advance to grow the value of the project. So we're putting together a significant summer exploration program this coming summer 2026 to test some of those high priority targets in the Whistler orbit that sit outside of the existing resource areas. And we're excited about the potential. We've set the task for the exploration team to go and make a new discovery this year. So very exciting. So keep an eye out in the coming weeks for updates on our exploration plans and, of course, the drill results that will follow.
And just to quickly touch on the copper aspect of your project, I'd love to get your overall thoughts on the current setup for copper, the tailwinds you see driving it, and just any thoughts you could provide as to the copper component of your projects as well.
Yeah, the copper component in the Whistler deposit, which is just one of those three deposits in the indicator category, we have just under 1 billion pounds of copper. So it is a significant copper deposit in its own right at the Whistler project. It helps open doors. I think it'll help with permitting, fast-tracking permitting. It puts us on that list of critical mineral projects. And of course, just last year, I think it was around October, when the USGS and the US Department of the Interior officially put copper and silver actually onto that list of critical minerals. So we're encouraged by the potential that having that copper in the system can potentially help open some doors, help us avail the project of potential fast tracking towards permitting and potentially even some funding opportunities that are sort of available out of Washington these days. So it really does help as an extra shot in the arm, I think, in addition to obviously what is a very big gold system.
Is there anything that we haven't yet discussed? Anything you think that maybe we should emphasize when it comes to potential shareholders of US GoldMining?
Yeah, I think just so the management are very experienced. We're led by a group of experienced veterans. We all have around 30 years of experience. We've worked for the mid-tiers and the majors. We know the discipline required around building very good quality data sets to underpin your models, which will help ultimately with the confidence of moving forward with both our exploration targeting definition, the execution on our exploration plans, the execution on our studies as we move into that sort of down that feasibility track to ultimately putting Whistler on a clear line of sight through to development and permitting.
Fantastic. Well, I'm going to put links in the description below to the US GoldMining website as well as social media for people who want to dive deeper into the company. Tim, thank you so much for coming on. As always, it's been a blast.
Thanks so much, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.